This is how the dip ends. After weeks of falling values of your collection, and for some who might have panic sold even losses, the question is, have secondary market dealers, the puppeteers of watch price setting, finally lost your trust forever? Now, the market has been in decline now for about 8 weeks, and the biggest question that I keep getting asked here is, Vinny, when is it going to stop? When are prices going to stop dipping and level out? And whilst I don't have a crystal ball, the answer really is quite simple, and it's as simple as prices will level out and stop falling once we start getting people interested in buying watches again on the secondary market. Now, market confidence is extremely important, and what we experienced in the first half of this year is a market confidence in watches more than we've ever seen before. And at the moment there is suddenly a lack of confidence in the watch market, which what we have to really do to understand where this is going to end is understand what's going on in other markets. So one comparison that you could make here in the UK is the housing market, which over the last few weeks, as with watches, has experienced a decline, and it's because there has been anxiety over global market issues, the Ukraine war, rising prices of cost of living. There's been anxiety for people to go out and spend money and invest in houses. So that's led to a slight decline in interest in that market as well. This massive rapid inflation that we've seen, which currently stands at 7 to 8%, but that is expected to increase to 10% by the end of the year. Basically what's happened is the anxiety that's being created by this rapid increase of inflation has gone through the roof. So homeowners, investors are left wondering how this is going to impact them and how they can afford things going forward. So why might a return into January's prices be a worst case scenario? And this is just basically purely my own opinion, but what we were seeing back then is the most sought after stainless steel models. Those models were in a territory of what I would call wealthy affordability. Now, for the majority of the stainless steel models, the Submariner, the GMT Pepsi, those were in the region of sort of 10 to 20k. Now, why was this important? It was important because they lingered around that territory for quite a while. What we saw in at the start of this year, 2022, is the majority of those pieces actually exceed £20,000. I want to put yourself in the shoes really of a grey market dealer. Once they start spending 20k plus wholesale on a piece like a Submariner Hulk, what you need to understand is it's a greater risk to them. It's a greater risk to tie up that amount of capital in just one particular piece. So what that basically led to was a situation where dealers were saying, right, if I'm spending £20,000 on a Hulk now, really I want to make a little bit more. I want a little bit more reward than when I was selling it for around £15,000 only 6 months ago. So what that led to was exponential growth in the market. So before we had a steady growth where stainless steel pieces were between 10 and 20,000. Once we passed that 20k mark on the majority of those pieces, we saw dealers actually saying, look, I need greater reward for my risk and just tying up that capital in just one piece. So the margins were higher, which meant for the end user it was bad news because week on week prices were increasing much more. So I just really want to give some figures to how the watch market has grown for the top 20 most traded watches. So in 2020 we actually saw growth of 22%, 2019 preceding that, preceding what was of course the coronavirus pandemic and a recession, we saw 40% growth. In 2021 we saw an average of 80% growth on the top 20 most traded watches. Now the other major question that I keep getting asked is, are we going to end up in a situation where Rolex watches are stop trading at a premium, where they start selling at under the retail price? Is it going to get as bad as that? Absolutely not. God, no, it isn't. Because I'll tell you now, what the most important thing that we need to think about is what's going on at the authorized dealers. I know as a fact that pretty much everything, in fact everything, is still being snapped up. Everything is selling. Everything that you see in the authorized dealer shop window is already pre-sold. They've already got someone on a wait list for that. If it's not going to go to them, the next 10 guys will get offered it. So they are selling, and they're selling within a couple of weeks. Nothing's available. Women's pieces aren't even available in the shop window for anybody to just walk in and buy anymore. 36mm men's pieces aren't available to just buy off the cuff. So if that's a scenario that's happening, and that hasn't changed in the last 8 weeks that we've seen this decline in the secondary market, then absolutely not. Prices are not going to fall below retail. It isn't going to get as bad as that. It isn't going to get anywhere near as bad as that, because Rolex fundamentally are still making this same amount of pieces year on year, and that applies for Patek Philippe and Audemars Piguet as well. We've heard no news that Rolex for some reason are dramatically increasing supply from the, I think it's around about 800,000 to 1 million pieces they make every year. They're not doubling that overnight. Nothing's changing. So demand is so over that 1 million pieces, extremely over that 1 million pieces globally per year, that is not going to happen. One other comparison that I want to draw really is to another alternative investment asset class, which is cryptocurrency. Now, cryptocurrency has always been a very volatile market, far more volatile than the watch market, which really we've only seen 2 dips over the last few years and a steady growth. Cryptocurrency has a reputation for going like that, and what we've seen in the last few weeks in Bitcoin, for example, is the leading crypto has traded in the red for the past few weeks, dropping down as much as 20%. The watch market absolutely, I don't believe, has dropped by 20% on average. Maybe we've seen a 10 to 15%, but it's been nowhere near as bad as that. And this is the great thing about watches. Watches are not as volatile as cryptocurrency, and therefore I don't believe that they are anywhere near as high a risk of investing your money, because of one thing, and that's what economists call non-pecuniary dividends. Now, what does that mean in English? Basically, as an owner of a watch, you're getting something more from that than the value of it, than what you're going to sell it for, than the profit you might make. It is a dividend that we can't put a price on, and that is the enjoyment and pleasure of wearing your watch. With crypto, you can't touch it, you can't feel it, you can't enjoy it, you can't show your mates, and that's the key difference really between, if we're looking at cryptocurrency and how much that's fallen and how volatile that market is, why we would say that watches will never be as volatile as that as an investment. Now, last thing I really want to touch on is something that I brought up at the beginning of the video, where I wondered, have end users actually lost trust now in secondary market dealers? Because if that is the case, where I know for sure that some customers who may have bought pieces in 2022 might have panic sold and sold them at a loss. The question is, how quickly, if ever, do those clients return? Because at the moment, like I said, this fall is being driven by the fact that, frankly, much smaller numbers of clients are pulling the trigger. Now, if we've actually burned the fingers of a proportion of that client base, then the question is, how long is it going to take for them to return to buying and regain confidence? It's a good thing in a way, because I think it will definitely long term weed out speculators. The guys that I brought up in the last video were basically flippers who bought a case of Hulks or green dial Daytonas and put them away because it was easy money for them, going up 10% month on month, and now suddenly have panicked and sold them all at a massive loss. Are they going to return? I don't think they'll return in the numbers that we experienced over the last year or so. It might be a bad thing, because those guys who bought a watch because they wanted a Rolex to enjoy, to add to their collection, they actually might now not come back after potentially having their fingers burnt. So that's the question. When will they return? Will they gain confidence in secondary market dealers? I think they will. I think they will eventually, when they start seeing prices go back up again. But I see this happening in September time, because historically anyway, during the summer, the secondary market dealers are usually quieter, because people are spending money on other things, going out on holiday, enjoying themselves, are not necessarily as much in luxury goods. Guys, many thanks for watching. I'm Watch Investor Vinny, and remember, this is the channel where we shine a light on watches as potential investments, as an alternative asset class. So if you're interested in all that, remember to like, subscribe, and what's the other one? Comment, yeah, whether it's good or bad. I want to know what your views are, and I will see you in the next one. Take care.